All right, let's do this, guys. Let's talk about renting out property to Section 8 tenants. Let's talk about renting property via VRBO, Airbnb. Let's make this passive money. Let's go. I am so grateful. Okay, I'm really grateful for the things that God is doing right now, because I'm telling you, every single day, multiple times a day, I get a deposit into my account. Sometimes the deposit is from my property manager from one of my long-term rentals. Other times is a short-term rental. Other times is a group home fee. Other times, I'm getting like a lease option check, okay? Other times I'm getting like a refinance check. And all of this comes just from the rental portion of my real estate business. First kind of tenant I like to rent to is simply affordable housing. Typically, the way I find out how much my houses will rent for, which goes into like my analyzing is this a good deal? Okay, I like to go through a website called rentometer.com. Okay, rentometer.com. And if you'll put the address in and how many bedrooms it has, what it does is it pretty much collects data from all of the like property managers and houses that are similar to yours in bedrooms and baths in like a 2-mile radius, and show you what the low, mid, and high is. Okay. Now, what I like about the low, mid, and high is really I can kind of determine based off of the number or based off of my financing kind of how I want to do the rehab. Like, because a lot of the times if you don't do a lot of rehab to it, you're going to get the low, of course. If you make it somewhat decent and you add central heating and air in there, then, you get the mid. But if you add stuff like floodlight cameras and put a dishwasher and a above the stove microwave and stainless steel products, then of course you're going to get the high. So I really like that. And I use that to determine how much I'm gonna get in rents. Now, I will say at this point in my business, I have a property manager. It didn't start out like that. I really, up until we got to about 30, I was managing my own property. And I don't regret anything about that. Honestly, to this day, I still find all of my tenants. I really don't even want they look for tenants. But typically I've been doing this for so long that I have my own website that I already have like a waiting list. So it kind of works. So don't be surprised that after you do this for a while and you build up a little community and brand, that you're going to be able to get more than that. Okay. But that's how I figure out how I'm going to like get the maximum rent, or what I can actually rent those houses for. Okay. Now, when it comes to short-term rentals, meaning when you're renting a property less than 30 days in most areas, you're going to need to look at a different comping system. AirDNA, that's a good one. Essentially what it does is you can put in your Airbnb listing into that software, or even just put in like the address, and it'll tell you similar Airbnb listings. Okay, they'll show you all of their pictures so you can compare, and then also show you their nightly rate. Okay, now nightly rate isn't all that with Airbnb. Okay, that's kind of one of the downsides to the app, because even though someone might be renting a house, that's a 3-bedroom, 2-bath for $179, that doesn't tell you the full story. Okay, it does give you a good example of how much you'll be able to rent for. But there's a couple other things that you need to consider when knowing exactly where to price your short-term rental. Cleaning fees are like a changer, like a game changer as far as your income. Okay, because I have 1-bedroom, 1-bath, and some people think for 1-bedroom, 1-bath that $150 is a high cleaning fee. I know it is, but I do that strategically because I want people that's going to be with me for a week, 2 weeks, 3 weeks, or a month. People that stay with me for 2 months don't see $150 as a lot cleaning fee. People that stay one night and pay $100 for the night, of course, $150 cleaning fee is tough. You see what I'm saying? So a lot of things you're going to have to grasp over time with short-term rentals. But I do like to make sure when I'm doing my numbers that my minimum, is $1,000 net. Okay, by the way, I meant to mention that on the long-term rental, but with the affordable housing, my minimum on that is $350 net. Okay, let's get into these expenses real quick before we get into my next category of my favorite kind of tenant that we're looking for. Okay, you need to know your expenses. That's how this thing works. Okay, now I know I'm bringing up long-term rentals and you think, hey, rent is $1,000 and you get to keep $1,000. That's not really how it goes. Okay, with real estate, you are going to have some expenses. With long-term rentals, those expenses are generally going to be your mortgage, okay, your property taxes, okay, your homeowner's insurance, okay, and then any kind of vacancy, maintenance, or repairs that you have to make to the property while you own it, okay. Those are going to be your expenses there. Okay, what you need to do in order to determine if this is a good rental, numbers wise, in monthly cash flow for a long-term rental, is to take how much the rent is, how much the potential rent is, minus your expenses. And if there's at least $350 left, that's your net cash flow, then hey, great, that's good. Okay, now if you happen to, with these numbers, don't over exaggerate. So let's just say rental meters say that the high is 1,300, but you got a cousin over there that's renting for 1,500. Still do your numbers at the 1,300. Okay, still do your numbers at the 1,300, because what you don't want to do is do your numbers based off of hope, and then you get into the deal and you gotta struggle through hope. You don't want to do that. You'd much rather do your numbers conservatively, and then you have a little extra cake at the end of the day. I'll take that. Okay, now with short-term rentals, you're gonna have a few more expenses. You have all of those that you had before: mortgages, property taxes, insurance, vacancy, repair, and maintenance. Okay, you're also gonna have internet. You're also going to have utilities, maybe gas and Duke Energy, depending on if your property has gas or not. Okay, and you might also have like some safety things, because I have Ring devices, and I also have like a CRM that I pay for as well. Okay, once again, after you minus all of those on my short-term rentals, I want to be making a net of $1,000 per door. Okay, $1,000 per door. All right, let's get to our next favorite kind of tenant. Okay, some people might tell you that it's best to focus on one, and I'll agree with that. I'll agree it's best to focus on, hey, I'm only going to do long-term rentals. Okay, but I will disagree, because after you have 10 long-term rentals, okay, you need to change it up. Okay, you need to find out what's better, because you don't really know if what you're doing is good or bad until you do something else. Okay, in business, there's a lot changing always, so you have to be willing to adapt. Okay, the next way that I like bringing in rental income with my properties is through helping people buy their first houses. Okay. I typically market this as rent to own. Rent to own. Okay, now there's a pool of people that the banks can't help. People that have bad credit, people that work for themselves but refuse to actually get things right on paper. Okay, or people that actually have like felonies or other like limiting factors, where for whatever reason they have a down payment, they have income, and they can pay. Other than that, banks, you got to look good on paper for banks. Okay, so those pool of people, who helps that, I think it's like 37% of people in the United States are in this pool. Who helps that group of people? You and I do. Okay, the way we help them, okay, is number one, we find a discounted property that we have long-term fixed money on. Whenever we buy a property and we got long-term fixed money, so whether that's a bank loan that's for a 5% interest rate over 30 years, or whether that's a subject to deal that we picked up and we got for the remainder of the loan on a fixed interest rate. When we have a property that has long-term money, we can offer that house to someone rent to own, which is a lease option. Businesses are a wonderful, wonderful, wonderful tenant that you need to be renting to, okay? Now, I'm not that commercial real estate investing guy. I'm not talking about that, okay? What I'm talking about is taking your single family house and targeting it towards a business, okay? What do I mean? So in one of my houses here on Gorell Street, I have a young lady there who's a hairdresser, okay? And she doesn't work at an actual hair salon. She typically works at home. She's an entrepreneur. So literally, even though it's just one of her, she, likes to have a 2-bedroom, 1-bath, so she can sleep in one and then she can do hair in the other, okay? Now, this is extremely beneficial because long-term tenants, typically they're trying to raise their family and live like a normal life. So sometimes that might mean a little clutter. Sometimes that might mean a Christmas tree from 9 months ago. Sometimes that might mean a lot of kids. But when people rent your properties to operate their business inside of it, that means they're going to keep it clean because they want to make a good impression on their customers. That means they're gonna cut the grass and do improvements because they want the best for their company. And overall, for you, they end up paying more, okay, and giving you less of a maintenance role, okay? That's gonna benefit you all day long, okay? So you need to make sure that you're setting up just little key indicators of what business people need you, okay? One of mine are actually group homes. Now, I actually don't do anything inside of the group homes myself. I have somebody who operates them, Miss Shawnee. We actually made a video with her. So I'll tag that so that way you guys can check that out. But literally, because Miss Shawnee wants to own a group home business, but doesn't know how to buy houses like we do, or know how to finance them, or know how to market, or know how to talk to sellers, and do all of that, yada, yada, yada. She just wants to run a group home company. We can go out and find people like that and partner with them and say, hey, let's create something together. Now, group homes are a part of that. Barbers and hairstylists are a part of that, okay? And let me tell you that media guys are also a part of that as well. And I want to steer you in that direction, especially as we go into this recession that we're in, because we're gonna need to diversify our tenant pool, okay? Now, whenever you're renting to this group of people, remember that you need to be making more than your affordable housing clients, okay? But you are going to be making a little less than your short-term rental clients because you're not going to be doing any work. With the short-term rentals, you're doing all the work. There's always go time with those, okay? So I want to encourage you, okay? I want to encourage you to get some of this money, okay? Get some of this money. Matter of fact, here's a little exercise based off of the minimums that I just gave you, the criteria I just gave you for how I actually analyze my cash flow per deal, okay? How many rentals and short-term rentals do you need to replace your job income? Right here in the comments below, okay? Now this last video that's next, I'm just gonna go and I'm gonna show you how to market to a certain group of people who need your help right now, who are willing to give you opportunities to buy the house at a great discount so that way you can have these rentals that I'm talking about, okay? Let's go to the next one. Peace, y'all.